What's up, everybody? Welcome to another edition of Dave's Daily Dives, where we break down the action in the equity markets and then take a look at 5 Zacks Rank #1 strong buy stocks that are breaking out to new highs. So, few things that happened today. First, you had the developments out of the Trump camp with Donald Trump Jr.'s emails. I never thought I'd be talking about Donald Trump Jr.'s emails with respect to the market, but this is the day and age that we live in. So basically the market took a hit, as you can see here, sort of intraday with this wick on this candle, and then it tried to recover but didn't quite make it. What I want to talk about here, though, this is the S&P 500, and I have an old fib that I drew from mid-April on through this 2405-ish level. Now, when I drew this initially, I had set up some fib targets here. Taking a page out of my good friend Jeremy Mullen's book, the 61.8% retracement here from this move came down. We found support, and then you go ahead and draw the extension. So if it was down here to the 61.8% retracement, you want to go to the extension of the 61.8 to the other side. The hilarious part about all this is that the market came up and basically ticked that 61.8% retracement right around 2450 and then started to come back down. That's pretty remarkable given the fact that this line and this whole fib level was drawn in May. So say what you want to say about the algos, they definitely use their fibs in their pricing. So that was interesting to see, to say the least. Now, since hitting that fib target, we've got a downward trend channel that's starting to develop here in the S&P 500, which is obviously bearish. However, take a look at how this really bad down day came down to test that fib level. And again, this level, which is essentially the high from early May, tested again and defended again. So that's the good news. So this is sort of the arena that you need to take and keep a close eye on. It's this 2405 level to the downside, which has been defended here a couple of times. Today's sort of intraday action to the downside is not so good, but you do have this bearish trend line across the tops that's beginning to develop. So keep an eye on that 2405 to the downside, and then really breaking out to the upside. I suppose you can use this 38.2% fib extension from this move at 2435. So keep an eye on those two levels, 2435 and 2405, in terms of the S&P 500. The NASDAQ, which has dominated the headlines as of late, is in a little bit of a different situation, shall we say, than on the S&P 500. So we know that the NASDAQ has been in a very bullish uptrend for a long period of time, but recently had some issues coming down below the 50-day moving average before finding a bid. Now, the good news is we've kind of flirted with this 50-day area and kind of ticking up a little bit. So that's a positive that we're seeing strength out of the NASDAQ. And you know that we've got earnings coming up here, so that, among anything that's going to move the market, earnings is definitely going to have a huge impact. So we've really got a few levels. The 6,000 level is very important on the NASDAQ composite. And if you go a little bit further down, these previous highs here in March, those are levels to watch out for too. What I tell people a lot is that this market has a tendency to pull a little rope-a-dope. And what I mean by that is it'll come down to a support level and just get a few ticks below it before going up higher, or do the same thing at resistance level, a tick above it. So these are stop grabber programs essentially that you'll see that play out a lot. So I'm hoping that this little tick down here a few days ago was in fact just like a stop grabber and we are on our way higher. However, you certainly can't say that we're out of the woods yet on the NASDAQ. And again, the swing low here right around 6,000 is very tempting. But if we could break through the top, find some support at this 50-day moving average, things could go just fine for us there. One other thing I want to check in with, because we were doing this for a really long time, was comparing this dollar yen, sorry, I'm rusty here, dollar yen currency pair here. Because globally, you have risk off when dollar yen ticks down, right? So when you have yen strength, in this case, yen strength is moving down to the bottom on the chart. So it's dollar versus yen, right? So we've got a downward trend channel that the yen pair was in for a long time. We're going back to basically the start of the year. Again, we had a few days where we ticked up above this level, started to look a lot more bullish in that regard. And then it dipped down below that trend line again and was bouncing along it. Recently, a breakout to the upside, so that's good. That is bullish in the short term, dollar yen. Now, the thing about it is we're here at the same high, which corresponds to, of course, the Fibonacci retracement levels, here in this sort of 144.5 range. So it's got to break on through this May high before you can say, okay, maybe it'll make a run up at the 119s. Now again, this is all still risk on behavior. So that's good for the market to see some risk on finally in dollar yen. So that should be conducive to a rally in equity markets. So that's kind of what's playing out on the macro scale. So let's get a little micro now. Let's take a look at some of these stocks that I have waiting for you. The first is Cala Biosciences. So it's a biopharma company focusing on developing small molecule drugs directed against tumor metabolism. So trying to fight tumors. And you'll see here, huge move in the stock coming from the $4 to start the year, surging up to 18 recently. Look at how nicely this is kind of bounced off the 50-day moving average. Now the 50-day is all the way down at 14.5, so 1457. So maybe it's a little overbought here. Commodity Channel Index is echoing that point. Okay. Another thing I like to use here is the shaken money flow. So money, anytime this is above 0, this represents accumulation. So people are buying this. Hopefully institutions are buying it. And what you want to watch for is this money flow should be agreeing with the overall movement of the stock price. It is, so that's a good thing. So a little overbought here. That is Calithera Biosciences, ticker CALA. And remember, these are Zacks Rank #1 strong buys, breaking out to new highs. Carolina Financial is another one. So this is a bank, a regional bank. I'll give you 2 guesses as to which state these guys are in. They're in both South and North Carolina. And this is going to be a little bit more of a slow and steady sort of wins the race kind of pattern. Nice little run up and then got stuck in a consolidation here for the better part of, 6-7 months from December really on through to recently. So the good news is that as a Zacks Rank #1 strong buy, you can basically, you know that the stock has had EPS estimates to the upside. So whenever you have that and you have this sort of wedge pattern developing where a stock is sort of ticking up near the highs, ticking up and finally breaks on through, that is a very good sign. And for a stock like this, found support at the 50-day moving average, that's also pretty good. The last time it did this at the initial stages of a breakout was back in November when the stock was down at 22. So this could be the start of a nice little move for Carolina Financial, ticker CARO. Then we're going to get a little bit more old school with it with Deere & Company. Good old John Deere, ticker DE. Now, obviously, this is a huge company. And these guys have been on a really nice run lately, too. Gapping up on earnings, sustained sort of rally. Another gap up on earnings. Kind of retraced a lot of that move. Tried to get to that gap, but the gap was defended and the stock broke to the upside. So right now, are a little bit worried. You have to be a little bit worried that it comes down and eventually fills this gap, but I think you're going to need some negative information for that to take place. Right here, it's ticking up near the 52-week high. I think you can play the breakout here, and you can really set nice risk parameters. Just put a stop loss down towards the top end of this kind of sort of 119, 120 area. I know $9 away sounds like a lot, but when the stock is trading at 128, it's very small from a percentage standpoint. So that's John Deere, ticker DE. The other one I've got for you here is Exelixis. I've said it many times before, and I've probably never pronounced it correctly. Another biopharmaceutical company. They're in discovery, development, and commercialization of new medicines. So they've got, and you can Google. Obviously, I'm not here for the story. I'm here for the technical aspect of this as well as the EPS side. So here you have stock ran out of gas, trying to push on higher to new highs, right? This is that little rope-a-dope I was talking about, the stop grabber, where they come up through a 52-week high, get you intraday, and then flush you. And that's exactly what took place here. And when it got down to below this $20 level, luckily, the buyers really started to step in. Then you have a huge spike higher, broke on through this previous resistance level, and now it's north of that level. So again, here's a breakout that you can play at new highs, but you have this sort of consolidation period, support here rather, kind of $23. So if you wanted to go long a stock like this on a Zacks Rank #1 strong buy, put your stops down here. You got a nice little risk versus reward playing out for you there. That was Exelixis. Say that 10 times fast. Ticker EXEL. And the last one for you is an oldie but a goodie. Good old ING. So this is the banking company, online banking and such. And here you have a nice long-term trend line to the upside. Not a lot of huge spikes up, not a lot of big, terrible retracements down. They've had a few of them, but it hasn't been too bad. 50 days provided some support. Of course, we got a little bit of a rope-a-dope again here in February, but if you look back, October, January, and then most recently earlier in the month, support constantly at this 50-day moving average, which again is good if you're playing a breakout here because you got 1794 to the upside, but this 1701 50-day moving average provide plenty of support for you on the downside. That again was ING, ticker, well, you guessed it, ING. All right, thank you so much for hanging out with me here on Dave's Daily Dive. If you don't follow me on Twitter already, it's at Bartosiastics, BARTOSIASTICS. And I will see you all mañana, well, maybe Thursday, for another edition of Dave's Daily Dive. Have a good one.